In this video, let me demonstrate how to evaluate a company using a checklist that I've prepared here. So this checklist um, can evaluate a company, one company, for example, initially from the list that you have selected. You can evaluate each one of them. So you can use a yes or no in this checklist, or give a score of 1 to 10 to make it more flexible. So the main focus are the company itself, its history, its the people, the one running the company, the project, and the catalysts. Let's go through each one of them. Company. When you look at the company, you consider their history, because you will get insight and understand why they didn't make a discovery. For example, if the company is new or they've been there for 10 years, haven't made the discovery, why is that? Are they going from place to place, or they just weren't unlucky? You may find that the chairman of the company is now a billionaire. He's founded the company, but they've just been unlucky to find anything of significance. Where have they been exploring? Were they exploring in Africa? For example, they may have been exploring silver or other commodities. You write it down. Have they changed focus? For example, yes, they are now exploring gold and antimony, which are at all-time high prices, and they are now focused in Australia, which is better. At current market cap, you can write down how much they are now, 20 million, for example. They have already historical drills with antimony of high grades, and the norm is 1% grade, but this company's historical drills had 3%. So those are all good indications. Anything you can find that's good or bad, you write it down here and score it accordingly. Second consideration is people. Who are running the company now? So check your reputation in the community or in the business community. Read their presentation, the company website, and videos that they have posted on YouTube. For example, they may have an old company, but they have a new geologist, and that new geologist is very known because he may have made a previous discovery. What's their background? They may have an extensive background. If one of the board of directors had a history of taking an exploration company to a producer, like from 10 million to 7 billion, that's a very big tick, because experience is very important, and how much of the company they own. In other words, have the owners or the board of directors and management of the company been investing in this company? Have they been investing their own money? That's called skin in the game. If they own 15% or more of the company, that's very good indication. You may give a high score there because their interest is aligned to interest of shareholders. And then the project. Primary consideration should be location and the quality of the project and their location in the region. For example, if their project is in Africa, if you Google, there are many companies whose licenses in Africa were cancelled by the governments. Not maybe not many, but still risky, because Australian companies who found big discoveries there have had their licenses revoked. That's very sad for many investors. So it's best to invest in a company that has project in a safe location. For example, if the project in Australia is located in a district where there are big mines around them, it means that that district, if there is a deposit to be discovered, is huge. So that's also another good factor there. Are permits already obtained? What are the near-term share price catalysts? So those are all part of the project consideration, but uh, I'll discuss more the catalysts here at the bottom, because I think that's a very important consideration after considering the company, people, and project. For example, catalysts. If they're already funded $10 million, for example, in the bank, they're ready to drill, they have the permits, that's a high rating for the company. If they are not ready, for example, in this XYZ company in column H that I put here, not ready to drill, but applying for heritage survey, native title agreement, drilling permits will come later. These are nonetheless catalysts. Heritage survey, native title agreements are also still catalysts, but it may take time. So just put them down here so that you can compare it to the other ones. And then you have the total score there. You can revisit and reevaluate. Now, if you are evaluating and preferably you would be evaluating a few companies. You can do them independently or put them side by side like this, and then see, compare each one of them. One of them may have a good people, good project, but they don't have catalyst. The other one may have stronger catalyst. So you make the decision. Are you willing to wait because they have good people and good project, or you want to go with the other ones? What catalysts are more appealing to you? The important thing is there must be catalysts here. So you want to ask those questions, key questions about the company, people in the project, and the catalyst, and then you make the decision. So I hope this has been helpful. I found this helpful. You can find other checklists prepared by others in other investors that are more elaborate, but to invest $500, I found that this checklist has been more than enough. You can reduce the information here or you can increase, but the more information you gather, the better for you. You may find that after evaluating 2 or 4 companies, you are not attracted to invest in any one of them. That's okay. You keep looking. You don't want to rush if you're not happy, because it's better for you to really satisfy yourself, and that's part of your learning process, to evaluate properly a company before you invest. But there's no such thing as perfect investment. There's always going to be risk. You have to realize that. So at least I've demonstrated here how to evaluate a company. I hope this has been helpful. I'll see you in the next videos.